What is going on, everyone? Welcome back to the channel.
It is April 16, 2026, and today the market is absolutely on fire with some massive moves happening across multiple sectors. We have got Tesla ripping over 7.5%, Coinbase surging more than 6%, SoFi breaking out, Morgan Stanley approaching all-time highs, and we have got Lucid Group going the other direction, down nearly 7% and sitting right at its 52-week low. There is something for every type of trader in today's lineup. So let's get straight into it. Here are your top 5 stocks to watch right now. Alright, starting with the biggest mover of the day, Tesla is up a massive 7.62%, trading at $391.95. And what makes this move even more impressive is the volume. We are looking at over 113 million shares traded today versus an average daily volume of just 68 million. That is a volume ratio of 1.67, meaning institutions are absolutely piling in here. This is not a retail-driven squeeze. This is real money moving. Now let's look at the technicals. Tesla is currently sitting right on top of its 50-day simple moving average of $391.10, basically to the penny. It is also well above its 20-day SMA of $366.98, which tells us the short-term trend has definitively turned upward. The RSI is sitting at 52.1, which is right in the neutral zone, no overbought conditions here. That actually gives Tesla room to run higher without hitting technical exhaustion. Now the big picture, Tesla's 52-week high is 498.83, and the 52-week low was 222.79. We are currently sitting in the middle of that range. The 6-month high was 489.88, so there is roughly 25% of upside just to get back to those recent highs. One thing I do want to flag, the PE ratio here is 356. That is a valuation conversation that never gets easy with Tesla. But if the growth narrative re-accelerates, whether that is robotaxi, energy storage, or a new affordable model, that premium can absolutely be justified by the market. For key levels, I am watching 365 as near-term support, which aligns with the 20-day SMA. On the upside, resistance comes in around 425 to 430, where we had some consolidation earlier this year. My 3-month price target on Tesla is $450, and I am rating this a buy with high confidence given the volume confirmation and the clean technical breakout above all major moving averages. Okay, now let's flip to the dark side of the EV trade. Lucid Group is down 6.7% today, trading at $8.21. And folks, this stock is sitting right on its 52-week low of 811. Essentially, Lucid is at the floor. Volume is running hot here too, 31 million shares versus an average of 17 million, giving us a volume ratio of 1.83. Heavy selling volume at a 52-week low is a very concerning technical signal. Let me walk you through the technical setup. The current price of $8.21 is significantly below both the 20-day SMA at $9.49 and the 50-day SMA at $9.88. That means every single short-term moving average is acting as overhead resistance. The stock is in a clear downtrend across all time frames. However, and this is where it gets interesting, the RSI is sitting at 27.2. Anything below 30 is considered oversold territory. So while the trend is unambiguously down, we could be approaching a short-term technical bounce. Look at the 6-month context. Lucid traded as high as $20.53 just 6 months ago. It is now down 60% from that level. The 52-week high was $33.70. The stock has lost nearly 75% of its value over the past year. The market cap is just $2.7 billion. There is no PE ratio because there are no earnings. Now here is the fundamental reality. Lucid is burning cash, production volumes remain tiny compared to Tesla, and the competitive landscape in EVs has gotten brutal. Saudi Arabia's PIF fund remains a lifeline, but that only goes so far. I would not be chasing this for a fundamental long. However, if you are a contrarian trader who plays oversold bounces, the RSI at 27 does suggest a technical relief rally could come. For key levels, $8 is massive psychological support. If that breaks, we could see $6 to $7 quickly. Resistance is up at $9.49, the 20-day SMA. My 3-month target is $9.50 with a hold rating and low confidence. Proceed with extreme caution. Moving on to Coinbase, Coin is up 6.23% today, trading at $195.90. The volume is 11.7 million shares against an average of 9.7 million, a volume ratio of 1.2. Not quite as explosive as Tesla, but still above average, confirming real buying interest behind this move.
The technicals on Coinbase look genuinely constructive right now. The stock is trading well above its 20-day SMA of 179.83 and its 50-day SMA of 179.03.
Notice how those two moving averages are essentially flat and close together. That tells me the stock broke out of a consolidation base and is now showing new upward momentum.
The RSI at 59.7 is bullish without being overbought. There is plenty of room to run before we hit the RSI danger zone above 70. Now let's talk about the bigger picture. The 52-week high on Coinbase is 444.65. That means even after today's rally, we are still 55% below the yearly highs. That is either a massive opportunity or a sign of structural damage, depending on your view. Crypto market conditions are the key driver here. When Bitcoin and the broader crypto market are in risk-on mode, Coinbase is essentially a leveraged play on crypto trading volumes and institutional crypto adoption. The P/E ratio of 44 is actually quite reasonable for a high-growth fintech platform, especially one that is tightening its cost structure and growing its institutional custody business. Coinbase has been diversifying beyond just retail trading, which reduces cyclicality over time. Key levels to watch: 180 is now your major support floor, that is where the two moving averages converge. On the upside, 225 is your next meaningful resistance level. My 3-month price target is $235, rating this a buy with medium confidence. The crypto cycle is the wild card. Next up is SoFi Technologies, up 4.91% today at $18.79. Volume is massive here, 70 million shares traded versus an average of 50 million, a volume ratio of 1.38. That is strong institutional grade volume confirming this move. The technical picture on SoFi is one of the cleanest setups in today's entire lineup. The stock is trading above its 20-day SMA of 1651 and its 50-day SMA of 1811. It just reclaimed that 50-day moving average with conviction, which is a textbook bullish signal. However, I do want to flag the RSI. It is sitting at 67.4. We are approaching overbought territory above 70, so short-term traders should be aware that we could see some consolidation after a move like this. The 52-week context is powerful. The low was 1049 and the high was 3273. SoFi has essentially doubled off its lows. The 6-month high was 3221, meaning the stock is still 42% below where it was just months ago. That is a significant recovery runway if the fundamental story stays intact. And fundamentally, SoFi is actually a compelling story. They have a bank charter, which most fintech players do not have. Their P/E is 45.8, not cheap, but reasonable given that they are still in high-growth mode across their lending, financial services, and technology platform segments. Rising interest income from their bank operations gives them a revenue stream that pure fintech platforms do not enjoy. Key support is at $18. If the stock pulls back, that is where I want to see it hold. Resistance is up around $22, where we had significant distribution earlier this year. My 3-month price target is $24, rating this a buy with medium-high confidence. And finally, rounding out our top 5 is one of the most prestigious names on Wall Street. Morgan Stanley is up 4.52% today, trading at $191.62. Volume is 9.8 million shares versus an average of 6.9 million, a volume ratio of 1.43. Institutional money is moving here, no question. Now here is what makes Morgan Stanley technically significant today. This stock is trading at a fresh 6-month high. The 6-month high is today's price at $191.62. The 52-week high is $194.59, so we are within $3 of an all-time annual high. That kind of price action, especially with above-average volume, screams breakout momentum. But here is what I need every single viewer to pay attention to: the RSI is at 80.7. That is firmly in overbought territory. When RSI crosses above 80 on a large-cap blue-chip stock, history tells us that a consolidation or pullback is likely in the near term even if the long-term trend remains bullish. The 20-day SMA is at 168.71 and the 50-day SMA is at 168.97. The stock is trading over $22 above both of those averages. That is an extended move that deserves respect. Fundamentally, Morgan Stanley is in excellent shape. A P/E of 18.77 is actually quite reasonable for a world-class investment bank and wealth management franchise. With equity markets recovering and deal activity potentially picking back up, Morgan Stanley's investment banking and institutional securities divisions should be generating strong revenue. Their wealth management business provides stability. Support is down at 175 to 178 on any pullback. Resistance and the immediate target is that 52-week high at 194.59. If they break through that cleanly, we could see a move to 210. My 3-month price target is $205. Rating this a buy, but with medium confidence due to the elevated RSI suggesting we may need to wait for a better entry point. And that is a wrap on today's top 5 stocks for April 16, 2026. Quick recap: Tesla and Coinbase are the strongest technical setups with volume confirmation. SoFi is a clean breakout worth watching. Morgan Stanley is approaching overbought but still a longer-term buy. And Lucid Group is one to avoid unless you are a contrarian bounce trader willing to accept serious risk. If you got value from this analysis today, please smash that like button. It genuinely helps this channel more than you know. Hit subscribe and the notification bell so you never miss a daily market breakdown. Drop a comment below telling me which stock you are trading today, and I will see you tomorrow for more market action. Stay sharp out there.